Hello traders, welcome again. As promised on previous video that I'll give a video about how to day trade correctly. Welcome to this lecture, and this will be very informative, or will contain a lot of information that's going to help you either as a beginner or maybe an intermediate trader wants to take your trading to the next level. That being said, my name is Rocky Calvin, and I want us to get straight to it without wasting any time. So I'm gonna be removing these markings here. They're from previous video that I did on why I was selling gold at that specific level, and that will also have a relation to with whatever I'm gonna be teaching here right now. So maybe you've been swing trading, or maybe you just still don't know how to trade, properly, and and so on. So there's a concept I want to talk about: time and price. Time and price has a lot of secrets, and once you unlock the secret, then you become untouchable at some point. Yes, losses are going to be happening because everybody loses at some point, but you're just going to be on another level whereby losses don't even matter at all. You can lose one or two, three trades, but your win ratio, is maybe around 1 to 6 R, and apart from 1 to 6 R, your strike rate becomes around above 70%. So if you're making 70%, that's your strike rate, or that's your strategy's strike rate, and you're making at least 1 to 5 R with good risk management, you're still way ahead, because I tell you, monthly you can even have around even 40% returns. Okay, so that being said, that is about time and price. So first thing first, if you're trading Asian session, then I'd like to disappoint you, because that is not what you're supposed to be focused on. Yes, it's okay. The best way to trade Asian session is now when you link it with the previous day, like what happened on previous day. So when you're trading Asian session, you're gonna be basing it with what happened on previous day New York session, because that's the last session before Asian session began. But I do trade New York session. So that being said, I'm gonna be working on both so that you can be able to get a better understanding of it. So time and price. Time and price simply means that there are some specific times where some specific things are supposed to be happening. So if you're in the wrong time, then that simply means that you're likely to lose money. And that's maybe the reason why some of your trades are losing, because you're trading at the wrong time. Okay, that's why I said, if you trade Asian session, if you want to trade it correctly, you have to trade it based, or you have to correlate it with what happened on the previous day, that is on New York. Okay, well, that being said, this is Wednesday. I want to work with an example right here. So assuming that I want to trade, let's assume I still don't like trading London, but let's assume I want to trade London. Let's assume London begins. I'm using UTC plus 3, so London should be beginning from around this level here, this 8 a.m. around here. Okay, so if I want to trade London, this is hourly time frame, because we're talking about day trading. Day trading, I'd want to go on higher time frames, and even in this video, as you can see, I'm not even working on daily, but it's way better if you set on daily time frame. So for example, know what exactly are you dealing with, like what's your daily bias. If you have that daily bias, it even becomes more clearer. So for example, you want to trade on Wednesday. This is Wednesday, right? So if this is Wednesday, then we see what happened on Tuesday and relate it with what happened on Monday. Then we can trade Wednesday. So, for example, Tuesday failed to give us a displacement above Mondays. This shows indecision in the market, and probably, possibly, or a possibility like this market wants to still drop down and tap some liquidity below there. So that being said, we are likely to be looking forward for sells this Wednesday based on price action between Tuesday and Monday. So now we dive into 1 hour time frame, and that 1 hour time frame. Remember, I'm talking about Wednesday. So as I've said, we are likely going to be looking forward for sales. Perfect. And now, if you're a trader who don't want to care about the daily time frame, you don't want to care about the daily bias, there's a way of also attacking it. So on hourly time frame, this is 8 a.m. 8 a.m. I'm not sure, not unless I change the time frame here to UTC. So for you just to get to understand me right now, maybe you can change to UTC plus 3, then switch it back to your time zone where maybe if you're in US or I don't know, but I'm using UTC plus 3. So this is where London begins, right? So this is Asian, this is all of Asian session. As you can see, Asian was displacing going higher and creating this bullish what? Daily, no, sorry, hourly fair value gaps. You see them? These ones. Price was creating them. This was the price action on Asian session. Okay? Now the question is, if Asian session was going higher, what was it looking for up here? It was looking for liquidity of the previous day, that is for Tuesday, this high, see right here, which as you can see was purged. It was purged. Okay? So we be like, okay, if I want to buy, because remember, daily bus is telling us to sell, but if I want to buy, the only question is going to be, I'm going to be using a PDRE. You see this PDRE created over here, this daily fair value gaps, this one right here. Yes, I'm going to buy from there. And as you can see, that's exactly what happened on some specific time. If you take a look, when I talk about the essence of time and price, what time is this? This is a silver bullet. So for example, silver bullet, you're going to mark the high, and this is an ICT concept. You know, one thing with ICT that I came to realize recently is that ICT, for you to get the full picture, you have to like learn everything, so that you, because now this silver bullet, apart from silver bullet, just in the same center here, we have the Judah swing, whereby the Asian highs were taken. In the same concept, we have like, there's a lot of confluences of ICT that if you just want to trade one simple thing, then I don't think you're likely going to, yes, you're going to make money, but you're not really going to, uncover the secrets of the markets. So for you to understand ICT properly or ICT concepts, you have to know how everything works. You need to know how Judah swing works. You need to know how, the silver bullet works. You need to know how, I don't know, there's a the other one called Scalab model works. You need to you need to know how okay, he has a lot of concepts that I've been forgetting the names, but I do kind of know how they work and so on. So just me adding my few conflicts and seeing what's that. So for example, this one here was a silver bullet. So with silver bullet, what do? You wait for price to attack one side of liquidity of this specific time, this specific candle of 17 p.m. When you're trading this in a UTC, for example, in a time zone that is different from mine, this is going to be a different time zone. So for us to be on the same page, switch it to my time zone, UTC plus 3, so that you can be able to mark the candle. Then you can switch to your candle and note that specific time. So this is a silver bullet time. So the rules are always like this. You wait for liquidity to be purged on one side, either buy side or sell side. Then you enter on a gap. You target the opposing what? Liquidity. Then that's exactly what happened here, right here. So I was not in my daily bias. I was supposed to be selling, but this was an opportunity to buy because Asian session created some imbalances right here. And the concept of time, this is a silver bullet time. So price taps liquidity below that silver bullet sell side liquidity, fills in that gap. Then guess what? We go higher. So you don't just enter like this because market might be interested in tapping this lower gap as well. You see this one here, this one. So what do? You now switch into lower time frame like 5 minutes. Let's find when it's there. Let's see 5 minutes. We look for a displacement or a fair value gap that has been created towards our direction. Where is it? Here we go. Perfect. Perfect. You see that? So once price purchased that liquidity, we created this bullish 5 minutes fair value gap. You see it right here? So your entry was supposed to be on that gap like this. You enter right there. Your stop loss just below this swing low, this one right here. Then what do you target? You target the opposing liquidity right there. That's a 1 to 2.5 hour delivered. You see that? That's how you trade. This is how they trade. The concept of time. What time exactly is this happening? And what's the price? Okay, that's it. So apart from that, remember, I was looking for sales in this day. I was specifically looking for sales. So if I was looking for sales, I'm going to ask myself a very simple question. The same concept, guys. The same thing. I want to take a look at how beautiful this is. Eh? So over here, we had liquidity. This possibly London liquidity. London right here. This was London liquidity resting up here. You see this relative equal highs right here? That was liquidity. Now, above that liquidity, as you can see, it was purged over here. After being purged, then we dropped down, creating that silver bullet time. And that silver bullet time gave us an entry of buying again, going higher. And since you are looking for sales, the best or another thing you would have done, you'd have just marked this high again. This is what? The silver bullet of 17 p.m. That's UTC plus 3. That's this is the time that is being used in East Africa and Dubai and Qatar. It is UTC plus 3. So just take a look at what's happening here. Price deliver from that specific sell side to the buy side of silver bullet. Now, if for example our strategy, as you have seen on daily basis, we're supposed to be selling it. This is how you do day trading now. Now we position ourselves once liquidity has been purged above here, and it even becomes better. It even becomes better when we take liquidity. For example, we create a swing. For example, this swing high. I'm sorry, this swing low, and price goes back in to close back in. Beautiful price action. So you wait on the next candle to give us the entry. Now on 5 minutes, that's what you see where price was coming back to that gap, okay? To give us that entry. It's the same exact thing here. This hourly candle purges liquidity above that silver bullet. In other terms, you can call it the buy side liquidity. Then what does it do? It closes back in. It does not displace above these highs. So we do not have break of structure or anything. Beautiful. So the next candle, we're going to be looking for a bearish candle. On 5 minutes, that's going to give us the entry on sales. Let's check on 5 minutes. Let's see what happened here. Where's Wednesday? Remember we're doing this example on Wednesday, and I'm gonna select any other day. I don't want this to be like, okay, maybe you just selecting those time frames that fits you well. So take a look here. We took liquidity. That was beautiful. You see that swing high, took liquidity and closed back in immediately. So what are we waiting for right here? We're waiting for a bearish gap that is supporting our what? Our bias. But unfortunately, price created a bullish one. Beautiful. So for traders who are beginners, they're going to be thinking, oh, this thing still want to go high, man. You see that bullish fair value gap? I'm going to be buying here and I'm going to be targeting those highs. Oh, very wrong, my dear. If you understand what's going on here, don't even try to do that because you're going to be losing money. This is a trap. This is a trap right here. You see, once we took liquidity and you understand the all overall view of price action on daily time frame, we're supposed to be looking for what? For sales. You understand that? And we just took liquidity of the silver bullet. And now price is creating for you a bullish fair value gap. No, that's wrong. So what do? Use this as an inversion. Use this as an inversion. So if you'd have used this as an inversion, you wait for price to come, invalidate that gap, as you can see. By this candle, it invalidated it. You wait for the next candle to get back into that area, enter like this, enter your cells. Even on the consequent encroachment of that gap, you with your stop loss above that high, this high over here that was created initially, that took liquidity, this one. Then what are you targeting? You're gonna be targeting these lows again. That's 1 to 8R, my friend. 1 to 8R. You see that? Or even better, because we already balanced these hourly gaps. Remember, these were hourly gaps. You're gonna be targeting the lower one. What does that give you? 1 to 10R. If you wanted to pass a challenge, this one single trade with one risk, 1% risk, risking 1%, you already pass it. Already pass it. See that? So the next day when you come in, let's go to the next day. Thursday. The same thing, guys. The same thing. Just understand the concept of, time and price and, specific times, specific things are supposed to be happening and you're supposed to be aware of that. So take a look at this. So the next day, you come in with a daily time frame again. daily time frame. Let's see. So we want to trade Thursday, but we don't know what happened. So on Thursday, we realized that we did not displace above Tuesday's highs. Wow. So price failed to displace above here, meaning that this day we are still looking for sells. And given the price action on these previous 2 days, you see how we're closing back in this range? We're looking forward for sales on Thursdays again. So once you know you're looking for sales, go back to 1 hour. Come back to 1 hour. Guys, I'm teaching you how to trade. This is going to make you money. I'm doing this for free. Nobody has paid me to do this. I started these things from ICT. I added my own conferences to them on how I can be able to, do them better. So we were looking for sales. This new day starts from here. You see this marking, this one right here. That's a new day. This is a new day. So this Thursday, okay. So we're gonna be marking the Asian liquidity. For example, Asian just began from, let's assume from all of this is Asian. So if we are looking for sales, and we also have this is gonna be London liquidity. Yes, this is London right here. This is London liquidity. So this is what I'm interested with, this London liquidity. And remember, where silver bullet, what time is it? Here we have our silver bullet, 17 what? 17 p.m. So what do? We mark the high. Same thing, same exact thing, my guy. We mark the high and we mark the what? The low. So if you're looking for sales, we're waiting for liquidity on the what? On the buy side to be purged. We look for a gap, then we sell. And that's exactly what was happening here. So in this scenario, we had a purge of liquidity of that right here. And also keeping in mind that we have to now switch to 5 minutes. We wait for a gap. Where is it? Thursday. No, I want Thursday. Where's Thursday? Here we go. So this was the liquidity right here. We purchased it. And what did price do again? It created another, instead of giving us remember, we were looking for a bearish gap right here so that we can be able to sell. But instead, it's giving us a bullish one. Okay? So what happens here? It creates, it created a bullish one. So this one is an inversion. We use this as an inversion to enter. So somebody might be thinking, like, oh man, we're going higher, but no, buddy, we're going lower. So this one has an inversion. What do? You wait for price to come back to it. And also it created actually another one. Come back to it and do what? And do your sales, for example, like that. Your stop loss above that high. Then you're targeting the lows. You're targeting, like, for example, this low over here. Let's assume this low here. Yes, right there. How much is that? 1 to 8R. 1 to 8R. It wasn't delivered on that day, but the next day, see what happens? Boom, on Friday. You see that? Isn't this beautiful, guys? Isn't this beautiful? So this high sturdy price action, and I can go on and on and on and on. This exact thing keep on happening. So let me ask you a simple question. If you made 10% on the first day, you made 8% on the second day, you're gonna be worried about losing 1% or 2%? Come on, man. Like, you literally have 18% returns right here in 2 good days. 18%. If you do this for a couple of weeks per month, you even have maybe even 50% returns. And it's the same thing here. See, this 17 p.m. What does price do? Take liquidity above there. But I was able to, position this even before it happened. I did this at like 5 hours before. I knew this was going to be happening here. And you see it happened exactly. Took liquidity up there, drop down. Guys, what more do you want better than this? I don't know. If you're still not making money, and the only reason why we're not be making money is because of indiscipline and so on. But yeah, the strategy is there. So see you in the next one. Cheers.